Are the Mag 7 setting up for a bloodbath? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Thomas Thornton, founder of Hedge Fund Telemetry. Hi, Tommy. It's great to have you back
Hey,
on.
how are you?
I'm doing okay. But I'm talking to a lot of people who are feeling kind of nervous. I mean, this market seems like it's on a rocket ship, especially some of these mega cap tech names. And it feels like people are getting worried. How do you feel?
Well, before I can just preempt people saying, well, he's been wrong all year. I have been wrong all year. I haven't been in the mega cap names. And for a long short manager, I try to find some value in the market. And I don't trade Bitcoin. I think that as much as the world wants to just keep buying these mega cap names, and it's worked. And kudos to all that have participated. I think it's going to be a different year next year, and it gets to a point where the risks start to increase as you don't really have any pullbacks. And I'm really good as a manager when there are pullbacks and defined pullbacks, and we're not talking, the 2.5 day pullbacks that seem to be generational buying opportunities, but those that last a few weeks that trigger some oversold conditions, and that's generally what I'm good at. So this year's been, an utter disaster for me, and the style that I trade. So I mean, so if my views for 2025, I think that there's risk in the sense that the concentration in the market and the speculation in the market. I've got to say, I've never seen it just get so crazy like this. And just before everybody in the comments say, "Oh, he was short Tesla," I'm out of Tesla. I've been out of Tesla probably for 100 handles, which I will say it's sort of a relief. But you know, Tesla's a 1.5 trillion dollar company now, market cap, and I think it's gained about 700 billion since the election. And their earnings are probably going to be lackluster. I mean, we have, the usual suspect analysts that are colorful and will raise their price targets and all sorts of stuff, but they don't raise their earnings forecast, which is sort of peculiar. Usually they do raise earnings forecasts when they raise price targets. But this is Tesla. It's, you know, a Tesla's a with Elon, and he's a made man, and the full self driving's coming next year, and robo taxis, and I'll say we can flash forward to a year from now, and I'll say that's probably not happening because I don't think that the Trump administration is necessarily good for Tesla in the sense that they're going to grant approvals. It really hasn't been a regulatory issue for Tesla. It's been more of just getting their full self-driving to work, which it still isn't working like Waymo is, for example. And Tesla's going up every day, the equivalent of a Waymo or a GM each day, and that's about $50 billion every day. And again, I think that I just read there's a guy that puts out the delivery data and earnings data, and I just read that he's still below the number that they have to reach to have year over year growth in their deliveries, and it's about 17,000 cars. And he also is a bull, and he said that if they come close, it'll probably be enough for the market to reward them for that. So it's a market that usually when you trade at 180 times earnings, you need to blow out your numbers to really do it. But this is a year that is all about the future. It's all about the future, and we're going to buy the future. And
Mm.
Bitcoin is the future. I don't. And look, I monitor and track Bitcoin charts, and my stuff's been saying it was going to go up, and it did. I also had a $50,000 price target on the downside. It touched it perfectly in August. So it's a lot of faith generated in a lot of stocks. Oracle and Adobe came out with pretty, okay guidance, nothing spectacular, but Broadcom came out and with sort of tepid guidance, but they said in 2027 there's a TAM, which is the total of addressable market of 80 to 90 billion dollars, and boom, there you go, it's the future. So everybody's been buying into the future, and I think the future is going to come next year a little flat. And the thing that I think is really the big risk for the markets is that the market cap increases are just extraordinary. And let's just say Tesla sells off and it's a 10% pullback. That's $150 billion of market cap that goes poof pretty quickly. And that, probably somebody's going to be in the chat that says, "Oh, that just takes it back, to 3 days ago," and that's true. But I think that, look, Google is another one. Alphabet. They have their quantum computer that they've been working on for years, and I've been monitoring this. But now it's sort of the rage, and it's all the quantum computing stocks went crazy today, much like uranium stocks did, and then those are the new thing now. So everything is sort of you move on to the whatever's green, and you go from there. And all of that in the backdrop that there's a lot of stuff that's really underperforming, that's not looking necessarily great.
Mm.
I'm short some financials. I have some industrials I'm short, transports I'm short, utilities dragging on lows, home builders I'm short, not looking great. Healthcare I don't trade, but that's really oversold. Materials don't look great, but the Mag 7 do, and the top 10 names in the S&P and NASDAQ have attributed to just obscene amounts of attribution by themselves. And what possibly could go right next year is that if we see some broadening out, and the 493 X S&P X Mag 7 today was down on the day. The Mag 7 was up 2% today. Uh, it's great, and people will be on on TV and talking about how wonderful it is on Twitter, and saying, because they're long, and that's cool. If you're long, just don't overstay your welcome here. And I think people are excited about the whole prospect for Trump coming in and Trump 2.0. But I think a lot of that has been priced in, and there's a lot of, again, the future that people are betting on that don't match up with current realities, with valuations, with momentum, with really the internals of the market. I mean, advanced decline data has been awful, and it was, the NYSE was down today, and the Nasdaq was up 89 handles, Nasdaq Composite, and the S&P was basically even.
Yeah. You could
It's
sort of see
hard,
that from the very
and
beginning of the day. That's the worry, I think. Like, no matter what, you see that and you see that divergence. By the way, hello to everyone in the chat. Actually, this is a great group, Tommy. As you know, they're happy to
I'm
see you.
happy to
Nope,
respond
nobody's
back to
nobody's
people in the chat too, by the way.
nobody's
Like,
slamming you. They're listening. And I think
you
that
can slam me. I am slammable. And in 2022, when I beat the market by 750 basis points, it was down and I was up. Well, you know what? I that was great, but I've sucked majorly, and usually those streaks come to an end as things get so stretched, and I tend to know what to do when markets get defensive and
yeah. So let me
different.
there's a lot to unpack there, and I want to do that. And Hank Day says Tommy's the goat. So when you have been doing this for a very long time, and so when
Too long.
wrong or
Too
not
long
this
after
year,
this year.
wrong or not this year, when I see something from you that calls this a dangerous market, I get concerned. And you are not just saying, okay, I had it wrong. You are very concerned about some of the dynamics you're seeing in the market. Um, history doesn't repeat, but they're regardless of how bullish you are on tech. And I want to separate those two things, because I think when we have a conversation about AI and the potential for AI, and some of these things that you're talking about in the future, that is fine, and you can believe that and believe that we are in this sort of, revolution of AI, and there's a lot to be said for that, and there's a lot of really interesting conversations. I've been having them with people about the promise that's there and the fact that this feels real, it's not just fiction. But the momentum and the speed and the relentless nature of this rally, I know gets people concerned because things don't tend to move like this. And you have a lot of people, or tell me, do the people who seem like they're in the market, are they making an educated decision based on research, or is this momentum? I'm getting headlines in my inbox: a seat at the casino, one more YOLO trade. I mean, Substack's full of it too, not just Twitter. There are
Yeah, I know
people
who
really
that one more
concerned that
YOLO
this is
trade
just a
guy
kind of
is.
momentum gamble.
Yeah, it is a total gambler's market, and you look at the option uh, activity. It's been going on for a while, and it's just getting to a point where what makes me concerned is the again the magnitude of the market cap increases. I mean, Tesla's up $700 billion in, since the election. I mean, Tesla. I mean, if General Motors is $50 billion, how many General Motors can it go up every day? And I know that, General Motors has their problems, but they sell more cars. They're more profitable. They trade at like what, 5 times earnings, and Tesla's at 180 times earnings. Tesla has a lot of hopes embedded in there. And look, I think that uh, Musk made his big bet on Trump, and it's it's taking a lot of his time to be with Trump and going through his whole, we're going to cut all this out of the government waste and all that, and that's fine. In many respects, I think it's it's overdue, but I don't think it's necessarily going to move the needle as much as it's going to take when you have high interest rates. You have the Fed that's going to cut rates and then go hawkish. You still have inflation that's sort of grinding around. It's not that low.
Mm,
Prices are still elevated, but it's a mania right now. And I mean, I just had my cable guy do some installation, and he was telling me how he's buying Tesla and Nvidia, and more power to him. But it's just when you start getting comments like that from random people that don't know what the valuation is, don't know the risks involved, and certainly Nvidia, if you're going to be in a stock, you probably can sleep in that one if it dropped 40%, because it has earnings for the next year or 2 years. But a Tesla, again, and I'm not short the stock. If you just joined us, I'm not short the stock right now. I day trade it on occasion. I have some put spreads in there that I just added. But it's a freaking mania. It makes no sense. And again, if this thing drops, you could see, okay, prediction, you're going to see in 2025 some of the largest market cap declines in history, and I believe those will be coming out of the Magnificent Seven, and I strongly believe that, and I talk about it every day on my notes, and I again, I this has not been a great year for me, and everybody could say, oh well, how hard would it was it? Well, it's not that hard if you're not looking at anything other than just price, and that's fine if that's what you do. But when price turns and you start to have to figure out things, it's going to be like 2000, and everything sort of just collapses. And the other thing that concerns me is that we haven't had any sort of pullbacks, which you need pullbacks to sort of soften the tension in the market, and give people the opportunity to buy. You have some rotation, but we haven't had any of that. And the longer you go in a straight up formation, the steeper the decline can happen. And again, shorts aren't involved. Shorts aren't involved in this. This is
mm.
this is pure chasing. And if shorts aren't involved, the pullbacks can be amplified because you don't have the natural buyer there to buy on a pullback. So I'm concerned, Maggie. I'm, seeking help. I'm getting a therapist. I'm gonna do what I can. But I do talk to all my hedge fund friends and fund managers, and we all see it. It's all just crazy. And when it pops, it's over. And then things, get real.
They get real, and it's if you have not experienced that before, it is incredibly painful, and it is indiscriminate, isn't it, Tommy? I mean, I think that's what I worry about. You could make an argument that, okay, the air will come out of the Mag 7, and we'll see the rotation that's been lacking, and we'll see the market breadth. That's the positive, right? That's the positive possibility. There's another possibility where people freak out and just indiscriminately sell everything and then layer on tech algorithms and everything else, and that's a more worrying scenario, and that's hard to stop if that happens.
Here's the problem that I see. If with a lot of stuff that gets oversold, and you look at energy, you look at and energy is a really good time to you want to buy energy around the end of January. Tends to have a really good seasonal period. We'll see if that happens again. It's one of the stronger ones. I I I was long a ton of energy. It was my largest weight in Q1 last year, and to my surprise, it was the strongest performing sector in Q1, even more than tech.
Mm.
And I got out of it. I should have shorted it. There's a lot of shoulda, coulda, woulda, going around. Um, and I'm the first to admit it. But again, I'm the first to take responsibility for my performance, and I will take responsibility when the performance turns and everything goes back
And a
to
lot of
the way
people
I
have
do
a lot of
things.
respect for that in the chat. So I think J&J, first of all, Paul mentioned Denise Shull. It would be a great time to get Denise on. I'm gonna call her up
Yeah,
and reach out to her.
I've actually talked to Denise so many times, and uh, I love her. I think she's fantastic, and I could probably use her.
You could probably
But
use her. Maybe we all need her. I'm gonna get her on. We're gonna refresh the year with Denise for all of us. But J&J asked a great question. And that is let me find it, J&J. Do you have any advice? So there are, first of all, some of you in the chat are saying, yes, we're lightening up too, because on some of our more speculative positions, because we are also worried about some of what we see. So I don't think you're alone in the concern that and some of the froth that you're seeing,
yeah,
Tommy. And other people clearly have been in the winners and they're happy about it. But listen, you don't want to lose, right? If you have been in those names, you don't want to lose everything you've gained. So J&J asking, does Tommy have any advice for timing tops and getting out in time if you are long the mania? Probably the hardest thing to do,
well,
right?
I've called 12 tops this year. I think maybe this month. I I mean,
You're out of that
it's
business.
that kind of year, and uh, you've had me on years that are miserable, and on those miserable years, I find more long ideas than I do shorts. And I think the best advice that I could give is to be half wrong. And usually, when people ask me, "Hey, should I get out of this? I got a profit," I usually say, well, first of all, it's your decision, but I tend to do if I'm thinking that I get out of half, and I'll sell half, and I'll be wrong if it goes up more, but right, and if it goes down, I'm not going to be kicking myself. It's an imperfect business, and so take imperfect gains and imperfect losses at times. Take some off. If you feel that what do I do? You might have too much of something in your portfolio. Um, I, that's sort of how I see it. I mean, I think hedge funds are sort of like sausage making. You love the taste of it, but you don't want to see how it's made. So sometimes you sell things at the wrong times, and you buy things at the wrong times, and you take profits too early, and those are the things that happen. But take some off. Don't be, if you're wrong, you still have some, and you can, participate. And there'll be pullbacks. I can guarantee one thing, that there will be pullbacks. And if next year, I mean, again, you got Trump coming in, there's a lot of confidence with what he's planned. I think it's a tougher task than a lot of people think, and a lot of people might forget of the volatility that we had during Trump. Just one tweet away from financial Armageddon. Uh,
There was a
it
lot I will
happened.
tell you, and they hit about right when the market opened because I was doing a show down at the New York Stock Exchange, and we'd blow up the rundown every day because 'cause he'd start
Yeah,
tweeting.
you just don't know. You don't know where it's coming from, and it's it's a pro business
Well, this is
presidency.
interesting because I've had some conversations with people who say that's the narrative, but in reality, there's a lot of populist it's not exactly the playbook you would imagine with what we used to consider pro-business. Not to say good or bad, just that there may be big changes coming, and some of those changes have to do with redistribution of wealth and, a change in the industrial policy of the US, and do we really know
Yeah, I don't
which
know
is
how
which?
much
And that those things can
redistribution we're
not be
getting.
straightforward good.
I'm gonna push back on the redistribution uh, with Trump. I think the rich are going to get richer. Quite frankly, they already have, which that happens because they're the majority of people that are in the markets and insiders in the companies. I mean, the insiders are selling tons of stock too. I mean, that's one of
Oh,
the
yeah, someone asked
little
about
things.
that. What are insiders doing with Mag 7?
Well, it's not like a lot of the big name people don't need to sell. I mean, they've already sold, over the years, so it's not like you're seeing it, but you're seeing the smaller players sell, and I think that's typical of what you're going to see. But I think that you look at Warren Buffett. I mean, Warren Buffett and I are kindred spirits because we didn't buy into the Mag 7. I mean, and he sold a ton of Apple, uh, which Apple's not a company that's growing that much. I mean, the growth rate with X Nvidia of the Mag 7 is around 3%. 3%. And you're looking at Apple trading at 10 times sales, which is the highest ever. You're looking at 35 times earnings for Apple, but they're going to come out with the future with a new flip phone or an iPad that, is thinner or something, and people will bid that up, but it's just because the flows. And those flows, here's the other thing. You want to know the risk I see? If you look at you look at XLI or you look at the financials, a lot of these things gapped higher and they've sort of, meandered around. And now they're starting to get to levels to where they're at the bottom of that little island. And if they break below that, and some are, those are people that bought higher that are going to be trapped, and nothing motivates sellers more than when the things that they bought start turning red.
Mhm.
And that's the potential. And if the mark, I mean, Goldman said that there's been about $200 billion of inflows since the election. That's a boatload of inflows, and that's a lot of retail that comes in late. And you have tons of people like from out of the country in Korea and Japan just trading U.S. stocks, and I have friends in Canada that are trading U.S. stocks. I'm having dinner with a fund manager in Wednesday in the city. We're going to talk about U.S. stocks because he doesn't trade Canadian stocks. He's a hedge fund manager in Canada trading U.S. And so if those levels start to break and people that chased higher start to find something underneath, they're going to quickly sell. But the other thing that I don't know if I mentioned this, but if the Mag 7 start to decline, I mean, we've seen what it's done on the upside, but if those guys start to decline, it's going to take everything down because people are long spies and Qs, and that's what's going to weigh on other things. It's those Mag 7 names have lifted for the most part all boats.
Yeah, that's what I was alluding to before. That's what I worry about. Um, MB just had a great comment. Are we just waiting for Main Street to grab the last piece of the bag, leave it holding? That's always what happens, right?
They're
People get
doing it.
pulled in at the
They're
end.
doing it now.
What
And
if they were to this is one of it's not there is no alternative, but one of the things you hear a lot, we had Weston on talking about this is, okay, yes, there are risks. Yes, it seems like it's overdone, but where else are you going? Europe stinks. Asia, it's sort of about
Europe doesn't
currency.
trade well. Um, I
Nothing
Jeffrey
else looks
Klein,
like it's performing. It's this sort of US exceptionalism, like it,
yeah,
hate it, disagree with it, but it's where the money is, so where are you going? Emerging markets, but then you have currency risk. You know what I mean? Like, where do you
yeah.
go? Cash?
Yeah, maybe. I mean, now cash gives you something. Jeffrey Kleintop, I think he's with Schwab, posted a tweet that showed if you took out Nvidia from the S&P and put that chart up against Europe, Europe would be outperforming the US with just Nvidia, which is crazy. I mean, Nvidia is like a third of the gain this year, and look, they've knocked it out. I mean, look at AMD. AMD, Lisa Su was just named CEO of the year, and her stock is down like 20%. I actually bought a little today, but don't tell anyone. Um, but I mean, think about that. I mean, AMD was an AI name. Adobe was an AI name. That's terrible. But you have these names that are still, there's some getting beat up. There's a lot of semiconductors that haven't traded really that well. But you have, if you post something and you say we have a 2027 widget that's going to sell $80 billion possibly, buy it and buy it hard. I mean, that's the thing. It's the future. Oh, we're going to have robo taxis. I mean, I look at Kathy Wood, and kudos to her. She's kicked my ass this year, but she's had outflows in ARC every single month this year. Every single month. I mean, she's still up. So, she's had a great year. Even though she's still down 60% from her highs, we won't go
Yeah.
there.
Well, that you have to look at the whole picture, right? So we did have a question earlier, about what you like, what are you obviously you're it's been difficult and we hear it,
What
and
do I like?
yeah, but what do you like? Are you
Um,
bullish anything? What are you thinking about? Like, you gotta get up, dust yourself off, and there's a new year, right? So what are you thinking about?
Yeah, I think the beginning of the year is going to be challenging. I really don't like I again I bought a little AMD today. I'm trying to look for things that are bombed out. I might buy XLV for the healthcare stuff. I mean that you're seeing a lot of tax loss selling. I'm probably going to buy energy sometime in January when things sort of wash out. I bought Etsy today, and Etsy's been sort of under the radar, and actually really it hasn't been doing well. But I think that the stock's starting to shape up, and around $60 here, it's sort of an inflection point, and I think it could work. And I'm not saying you're going to 100 on it from 60, but it's possible. I think there's a lot of people that bet against it. Goldman downgraded it on the exact low of the stock, down below this. So I'm kind of looking for some contrarian things. I've had a good year with a few names. One called Pure Cycle, it's up 100% for me. That's good. One Golar, which is a liquid natural gas infrastructure play with vessels that they're very, very hot business right now. Stock's done great. I've had a couple stinkers. I've been too short things, and
Yeah, I wanted
uh,
to ask you, given how you feel, are you willing to short some of these Mag 7 or it's just too dangerous with the
yeah,
momentum?
you know what? I'll be short spies and cues at time, and I'm short them now. But I do think that it's just a matter of when the music stops and everyone's scrambling for a seat, and there's nothing there, and it's musical chairs, and boom. I've been in those markets before, and all of a sudden it could be Apple coming out and saying, "Oh, our numbers are not great on the new iPhone, but next year we've got a flip phone and we've got thinner ones, and you got to wait for that." But and it's ridiculous, but it could be any of those. And that's what happened in 2000, when all of a sudden, the expectations were super high, the markets were really elevated, and one company started to say, "Well, it's a little slippery here, not so great, or we're pulling back on our capex. I mean, if all of a sudden we start to hear that and the data center business starts to slow a little bit, it doesn't necessarily, I'm not saying it's falling off the map, but let's just say it starts to peak. That's something. I'd like to buy Nvidia back at 100. I think that could be a decent place, and it could get there pretty quick because we had the yen carry trade, and this is important. The yen carry trade unwind, it didn't just hit currencies, it hit everything. And like I said, people in Japan, Korea, all these foreign countries that sold everything. They sold crypto as fast as they possibly could. Apple, Nvidia, Tesla, all these just got whacked because there was that rug pull that everybody had to get out, and the positioning was so on one side, and that's kind of where we are now. So I kind of look at things and have this. It's coming. I don't know exactly when. I mean, one thing I do look at, I look at the mark indicators, and the daily ones have seen these 13s, and all of a sudden we get these little dips. The longer term time frames, weekly, NASDAQ 100 has a 13 on the top on a weekly. It had a 13 on the bottom, which, people say, well, they don't work. There was a 13 on the bottom in October of 23, but people would have told me then, oh, that doesn't work. That's not going to work. We're going lower, blah, blah, blah. But I think that these are exhaustion signals that matter. And when I see more of them, I mean, the S&P has them, the NASDAQ has them. IWM doesn't trade so great. Russell doesn't trade wonderful. And again, I think a lot of shorts have been hiding in Russell stocks. And I think if there aren't that many shorts there, this thing could come back down as well. And again, you have a new president that we kind of know, but I think the expectations are a lot higher. It's a lot
Yeah.
different, Trump 2.0 versus uh, 1.0.
Yeah, that makes a lot of sense. Are you worried about leverage in the system, Tommy?
Oh my
Last
God.
question.
Of course I'm worried about leverage. I wake up in the middle of the night and I scream. Like no, if you want, you go look at Thomas Petterfee or of Interactive Brokers was on a video. I think it was CNBC or one of them, and it's online. You can see it, and he said our margin balances are 17% higher. When he's warning that there's too much leverage with his clients, and it's concentrated, and he says it's concentrated in the top 10 stocks, the Magnificent Seven stocks. I mean, he's a really smart guy that sees a lot of data that we don't see, and he knows because he's been through it a few times of when these things, the rugs pulled out from everyone, and boom, he's worried about his company getting held, with margin calls.
Wow.
That's his worry.
That's scary. We all need to look at
Yeah.
that. I mean, listen, I think that that this is a really important message to have right now. And if you want to ride them, that's fine. I think Michael House said if you're gonna party, party by the door. When I talked to him about a month ago,
Yeah, and
there's a
listen,
lot of
kudos
people
to
who've
him
been doing
because
this a long
he's
time that are
he's been
worried.
really right.
Yeah.
Michael Howell's been very right on the liquidity aspects of the market. I underestimated that. It's liquidity is great on the way up. I remember back in 2007, 2008, I used to speak to all my brokers, the sell side brokers, and when I was running the larger fund. Oh, liquidity is great. Liquidity is great. What happened like 6 months later when liquidity wasn't so great and everybody needed to sell? Liquidity is great on the way up. I'm going to say that is just the way it is, but it's not so good when everybody says, I want to sell 10% of my, XYZ, my Nvidia or my Apple or Tesla. I'm just going to take some off. I'm smarter and I'm quicker. I can get out faster. Those are the things that I remember hearing in 2000. Oh, I can get out. I can get out of my Qualcomm. I can get out of my GDSU. No problem. No problem at all. I they didn't.
And as Mike
So
Green points out, more is passive, right? You don't have active money managers or active managers in there looking to buy or providing another side to the market. That's his concern. It's all passive and momentum in. Same will happen on the way out, and that's something
and
he's really
it's
concerned about.
worse now because of the market cap exposure. It,
Yeah.
it, it it's it when you have a company like Tesla go up $700 billion in 6 weeks, and on nothing. I mean, nothing, and the business is not necessarily growing. I mean, again, I will come on here a year from now and say I told you they weren't going to have a working robo taxi that they say they will. The full self driving is still in beta. All that, and I will be back and say that. And I know everybody's going to say, "Oh, I told you." Here they are, but I don't know. I just I'm sort of exasperated in this market. I look at it though as an opportunity for next year because I am good on the short side when there are some pullbacks. And on the short side, I'm short them down. I have indicators that tell me when I should be buying them, when sentiment gets overdone on the downside, and it works beautifully when it works. But this has been a market that's sort of masked by 10 stocks that want to keep going higher and a lot of inflows. And again, in 2021, and we probably did a call on it, or we did a show on the old channel, um, Relvision, that was I talked about the inflows back then, and the inflows in 2021 were just absurd, absurd. And I said those people, if they get underwater, those people will turn into future sellers. Those are future sellers. People buying today are going to be future sellers. They're not holding Tesla for the long haul. They're holding it, for a day, 2 days. It's just it's a casino. I mean, we can trade stocks during the week, and we can gamble on sports during the weekend. It's a casino world that we live in.
It certainly feels that way. Well, hopefully everyone can sort of absorb this, check your time horizon, check your risk tolerance, be careful. If you've got leverage, this might be a good time to look at that, and
Yeah,
then have fun. If you're comfortable, then have fun and enjoy it, but just make sure you are rock solid
it's
on
all fun
what
until it
your portfolio
isn't.
looks like.
It's all fun until it isn't, Maggie.
And
And
there will be real harm to real people who can't afford it, which is, I think, also what is probably in the back of Tommy's mind as you sound
it's
distressed
in the
about this,
front of
because
my
we've
mind.
seen this
It's
before.
like
We've seen
bursting
this
out of my
before.
vessels. Blood vessels are like, I mean, I feel like that guy on that crazy 1970s or 80s movie Scanners. I don't know if you saw that. It was a sci-fi movie, and the guy's head exploded. I look at my screens and I'm like, my head is going to explode if I just keep watching this. So
Well,
it's
I'm gonna close out with a message from Catherine, in the
uh,
chat, and she said, "Tommy, you're great for your subscribers. I don't think anyone expects you to guess every market move. We are with you for the strategy and the information. We learn a lot from you. Profits will come too." Thank you,
well, thank
Catherine.
you, Catherine. I appreciate that, and I do have a very loyal amount of subscribers. Very grateful to them. I generally get them right more than wrong, but this has been a pretty unique year that just hasn't fit my parameters, and I stick to a process. I'm not going to deviate and move on to the what's green of the day type thing, and we'll see how we go through 2025.
Yeah, and I think we're all gonna look back at this with some lessons this year. As this market changes, the nature of it's changing before our eyes. So but I love it. And a lot of people are responding, saying truth is always praised. And I think that's true as well. So Tommy, we appreciate it because you could just hide and not come on, but you don't. You come on, you
I
talk to
don't
everybody.
hide. I would like to hide. I would like to hide in a witness protection program and never look at the markets again after this year. But I look at it also as an opportunity because crazy markets I've traded before. Um, I've done well in those types of markets, and we'll be there again. But it's just gone on way further than I anticipated. And
Well, like I say, when I
I
hear you this worried, then it it should cause all of us to go take a good hard look. We don't always have to agree, but you can take a good hard look at where you are and make sure that you sort of do your homework right now because it
yeah,
feels
I
like there's a lot
my
of
last thing
volatility
is
coming.
my last thing, Maggie. I'll just say, I don't do like the end of the year price target type stuff, but I do anticipate seeing the Nas or the S&P under 5,000 at some point in the year, and maybe 4,500. And as much as that seems, like I can fathom that, we were almost under 5,000 in August, and I wouldn't also rule out the potential for something a little bit more dramatic in the sense of some sort of crash. And I don't say that lightly, and I'm not predicting it tomorrow, but I think as we haven't been, we've just gone straight up and we haven't had any, meaningful correction, and people are so positioned on one side, leverage. I mean, I can go on and on. We've already done that, but it could be something dramatic, and that's why I think you want to be ahead of it and think a little bit more about what you hold. If you're concentrated in certain things, take some profits. Don't be piggish, because this is a piggish market. I mean, I don't know if I can use the fart coin was up, I think, again today. And I think when you start to see things like that, things that have no intrinsic value going up uh, every day, I can't plan that. It's a little difficult. So I will
No,
leave it there, Maggie.
that's a great example. Whenever I see things like that, I think to myself, "What could possibly go wrong?" We've seen it before. Tommy, great to have you on. Thank you so much. We look forward to catching up with you next year, new
Yep.
year. Enjoy the rest of your year. And I think based on everything you said, the way I close is really appropriate today, which is take care and good luck out there, everybody. Be careful. You heard it here. Thanks. We'll see you Wednesday with Tony Greer. Gonna close out the year with him. Take care, everybody.